Hello everyone, today we discuss about Iron Condor, how to make almost 100% a year. First of all, it's Iron Condor. Let's go.
On SPX.
On SPX.
Okay.
You can use any stocks, but SPX, for example.
So you have to go 1 month out.
Okay, 1 month ahead.
So SPX, go to the option table.
Okay, we know about it. Next.
And then the rule always is go 30 days
or more.
30 days or more. 30 days is the minimum. So I have already opened for 26. I can show you for 28.
Okay, good.
And there you always go to 10 delta.
10 means 1. Delta is here.
Yeah.
But you go in different direction.
No, it's here. So you go
10.
to 10 delta and you create first sell a vertical here. Always sell, never buy, because this trade always gives you
Vertical.
Yeah.
How many contracts? 1, 2, 1.
2 contracts. For me, it based on the capital. If one contract, then the capital required is 2,500 minimum. 2 contract, capital required would be 2,000.
It doesn't matter what's the strike price.
No, I mean, of course, we have to look into it. So if you see here 7180, and then if I go further here, so I'm looking for, let's say, 210, 22. So I'm gonna do actually 7225 here.
Why? Why did you change?
Because that fits my capital requirement. Like how? So if you see here now, the difference is 25. So exactly 2,500, 5,000 capital will be needed to play this trade. The spread which we are getting right now is $1.60.
Not spread, credit.
Credit. So you will be making $320 in this trade.
In a month.
In a month on a capital of 5,000.
Yes, you get money right
so
now.
So if you see here, it will show you how much the net money you're getting minus commission. So $315. And the capital which will be blocked will be 4,680. Just do it to the cent. Now, because on this side we have already it got executed. Now what we do is we do the similar trade on the put side, and the good part of this is that when you place the trade on the put side, the capital is not going to be needed because
it's the same.
Because you will be winning on the one side. Either you puts will win or your calls will win. So right now, so broker doesn't needs another capital to place this trade. So I go here again, same thing on 10 delta. I'm gonna go 60.
All of them 10 delta. Which one do you choose? All of them 10.
Let's say start easy 6,400, which is always sell a vertical here.
But why? Why did you explain? Why did you choose this?
What?
All of them 10, but why did you choose this one? Not 2010?
No, I think its execution will be much easier. Like 6,400 is an even number. Normally traders like even numbers to place
not okay.
trade,
Next. Okay.
things like that.
Again, right click, vertical.
Vertical, and then you create the 25 point difference here.
Why? Should it be the same like previous?
Yes, the same. Do 2 contracts, and you will see that you will not need any more capital to place. In this, you are getting $140 per contract. The total will be 280.
Let's get next.
If you see here, buying power effect is $0. Last one has 4,600 here. That's the advantage of placing an Iron Condor, where with one side of the trade, the other side also you can win.
Okay, let's go.
Right. So if you place this, and then the trade will get executed. Now, this is the best way to create a option income. This is called as an income strategy, where you need some capital.
Okay, go to monitor.
And I can show you that how much money I have in credits I have collected from August 12th. So I'm monitoring. I have already collected 22,000, roughly about $23,000
by trading
credits,
options.
by trading, similarly collecting credits.
What about our discuss? butterfly and other
No.
options? That
I
doesn't
think
mean.
the other options also have a lot of values,
What
but
about
they are used in different. This is a pure income strategy
what
where
about
you are
regular calls?
regular calls will
Okay,
not.
show example. For example, regular calls. Calls for what? For the same, for SPX. Go. Trade. SPX. Let's see calls. Expiration, for example, next month. It's fine. The same.
Okay.
It doesn't matter. Let's see how much will it be profit. And when you choose regular calls, what do you choose? What delta, gamma, theta?
No, that's the wrong question.
No, it's okay. How do you decide what calls to choose if you want to trade?
For iron condor, the
No,
strategy.
we're not talking about iron condor, regular calls. Because people ask what difference is between this strategy and regular calls.
The difference between, so let's say if you are going regular calls, that means you are bullish on the stock market. And for
Not stock market, exactly on the same.
no, SPX. Unless you're buying calls means
On-
you are bullish,
Yes, on the underlying
which is a
asset.
yeah.
It's not
So
actually stock market. Stock
yeah,
market
I
can
mean
go down, but
SPX.
yes, if you trade SPX. Not okay, let's do it. Let's place a call for SPX.
Why?
Just to show example.
No, I mean, yeah, if you have to just buy just a call of at the money call, so if you buy like $6,850, let's say, or
Is it call here?
855.
It's a put. It's a
This is a call side, this is a put side. It's written here on the column.
where? Yes.
Here, calls.
No, it's
and
okay. Let's
puts.
do calls. Let's buy calls.
So if you just buy calls, that means, let's say you buy it for this, let's say you buy one single option contract here.
But how to choose a strike? What strike should it be?
No, you cannot select just a strike like that. You have to be either bullish on it, and then you can buy it at the money. Here,
What do you mean in the money
Yeah, you can go in the money also, but the point here is,
or out of money?
if you buy one call, this will cost you almost
Dollars.
$11,000. But the point here is this, that if it is 6,855 plus 100 to make any money on this trade, if you are bullish on it, minimum the price of SPX has to be 7,000. And the way to calculate is 6,855 plus the premium you are paying 115. So if you add the price, so that will be roughly about 6,970. So to make a single dollar of your $11,000 investment, the price at November 28th, the price of SPX needs to be minimum $6,970 or more to really make any money if you're going long. That's why in option trading,
No.
people
People
don't
buy
understand.
it in order to close it earlier before.
Even before also, but
Nobody want expiration.
the other aspect is here you have a theta of $2. So that means every day you keep this option, the value of your option today is $114. Tomorrow by default it will become $112
It's going
because
down, deterioration.
So that's why it becomes a very complex, that if you are bullish on something and you want to buy a call, and that's why sometimes people ask question that, hey, I'm bullish, I bought calls, but still I did not make money, because you bought calls but you never paid attention to what is the theta, that every day you by default lose money of your option premium.
By how many? 2%?
$2.
By $2.
So if you kept this call for 30 days, by default, let's say 20 days are
$60.
there, $45 will be gone in just on one. $45 multiplied, so already you lost 1/3 of your capital in theta here. So it's a very bad trade actually if you just go long.
Okay, iron condor is much more better.
Iron condor is a direction neutral strategy. It is mostly used for income. It doesn't gives you crazy amount of return, but it gives you consistent, 5%.
Why not crazy? It's almost 100% a year. If you calculate
5 to 6% a month. That's the goal. That's the maximum you can get.
Multiply 12.
Yeah, multiply 12. Still, it will be 50-60%. It's
okay.
not.
What about other strategies?
Other
butterfly, and what about
I do not
sell
know.
puts
No.
and buy calls?
No, those
Covered
are not
calls.
strategy, but butterfly, those are more. I don't know about those strategies. I know vertical spreads, and I know naked, like a wheel strategy type of thing.
No, naked is not with strategy.
No, I mean if you want to.
Naked put when you don't need money to trade, but if you assign, you have to bring capital. Otherwise, it was a margin call. Okay, subscribe, give like to this video, and this way you can make money. And again, this strategy iron condor doesn't require stock going up crazy, because requirement is this stock has to stay within this range.
Yes.
If it's going above, you can lose money.
No,
And after that, you
then you
have to roll.
you can roll it.
But to
Yeah.
roll, you have to have money again.
Yes.
Okay, subscribe, give like to this video. See you.